As your ideas unfold and the bank of family and friends dwindles down, you might find yourself at a point where you will need to find an investor to help take your business to the next level. This week, we touch base on some do's and don'ts to finding an investor. Alan Riding, an expert on angel investing and professor at Carleton University, says that angels look for companies with growth potential. They understand that it may take several years before their investment will pay off. Angel investor. A person who invests in a business venture, providing capital for startup or expansion. These individuals are looking for a higher rate of return than would be given by more traditional investments, typically 25% or more. Here are some things to keep in mind when shopping around for investors. Do get publicity for your business in local publications and trade magazines. It is much more impressive if an investor hears about you before you contact them. Do build up personal relationships before asking for money. Every entrepreneur will tell you it's all about building and maintaining relationships. Do your due diligence and find out if your prospects have invested in other businesses like yours. Do a little research on your own and talk to people about their experiences. Do ask around for advice. Talk to your accountant or your attorney. They will usually have a pretty good idea who has money. They can also provide an introduction. Someone who knows someone can carry a little more weight because you came as a recommendation from an individual they trust. John Nelson of CalCap talks about what they look for when deciding which companies to invest in.
We give 3 weights to the team, 2 weights to the market, and 1 weight to the technology. And we say we're a tech investor. That means only about 17% of our decision criteria is weighted on the technology. And that sort of reinforces what I've just said. The team is the most important.
Now, on the flip side, here are some things not to do when looking for an investor. Don't forget to include employees. They might want to invest in the company. Don't assume that an investor will be an advisor or that you'll even want him or her to be an advisor. Don't hide the size of your own investment. Remember the bank of friends and family? Make it clear how much you've invested. Don't be afraid that your business is too small. About 2/3 of the companies getting angel funding are worth less than $1 million when they receive the investment. Stephanie Granado of Granado Law Office talks about some common pitfalls for entrepreneurs to avoid.
You get crazy entrepreneurs in a team and they want to attract everyone, and without, maybe they want to attract a name without thinking, what can that person contribute to my business? And I've seen a lot of that. And they'll give away equity or they'll forget to keep records, and that will tank the whole company.
Finding an angel investor is not a particularly easy task, but the effort will really pay off when you find the angel investor who is willing to invest in your business. Besides providing the capital your business needs, the advice and the know-how of an angel investor can be key to shaping your company's success. This is Kim Lai with Insight. We'll see you back here next week.